Goeiedag, dit is een nieuwe KoersKompas-podcast. Vandaag heb ik Jared Dillian te gast, een Wall Street veteraan durf ik wel te zeggen, en een bestselling auteur. Jared, welcome to the show.
Hey, thank you.
Great to have you. I gotta mention this before we start here, I also have a book you wrote, which is
Great, awesome.
No Worries. Certainly recommend it for everybody listening. Let's start it off here with you have a maybe, let's say, a peculiar way of analyzing the markets. You tend to look at psychology a lot, at sentiment, at positioning. Do you think that that's a thing that gives an investor an edge?
Oh, absolutely. I think that fundamental analysis doesn't give people much of an edge at all. You have people looking at the same data and interpreting the same data, and it's I've never found any usefulness for fundamental analysis. I mean, some people make it work, but I've never been successful at it. Um, Technical analysis, I think when you're talking about basic charting techniques like trend lines and head and shoulders and stuff like that, everybody's looking at the same charts. There's no edge. I think if you dig a little deeper into other technical techniques, then you might have an edge. But really, you know, the markets follow the markets are made up of human beings who have emotions. And I think that like the entire CFA program is designed in such a way that it teaches people that when faced with a market that's irrational, if you're more rational than everyone else, then you'll succeed. And the goal isn't to be more rational than the market. The goal is to profit off of the market's irrationality, you know. So this is what I've been doing my entire career, literally for 25 years. And it's worked for me. So
Are you talking more as a investor here or as a trader?
yes, I'm talking as a trader. Yeah.
Right. Yeah, yeah.
Yeah.
Um, let's switch to a good topic here that's very hot here, a little bit less hot than a month ago, surely, but Donald Trump, he's in office again. Is this gonna prolong another period of American exceptionalism, or are we just gonna have to buy the NASDAQ or other American stuff and go to the beach, or is this gonna be a little bit different?
Well, I mean, first of all, in terms of the stock market, I think everybody's assumption is that because of his pro-growth agenda, explicitly pro-growth, the stock market is going to go up for the next 4 years, and I think that's a terrible assumption. I think we've priced in most of the growth that's going to happen in the next 4 years. I think it's already priced in. And now what comes down to execution risk, what can he or can he not execute on? So, and also, Donald Trump has some um you know, anti-free market instincts. I saw earlier this morning he was commenting on the longshoreman strike. And this is an industry that could be completely automated. We could replace all these people with machines and computers and completely automate them, which is what we should do. And he wants to keep them all employed, America first, stuff like that. Um, you know, this is this is Milton Friedman talking about, digging holes with a spoon, if you want to keep people employed. So, Donald Trump is not Ronald Reagan. He's not Javier Milei. He does have some tendencies which are not capitalist. So I don't look at the next 4 years. I mean, look, like I think it's better than the alternative. I think we're much better off than if Kamala Harris been elected, but it's not going to be like a free market revolution like a lot of people think. So
Right. So what does that make you at this point to classify here? Make you neutral? Or you bearish here for the stock market, or how are you looking at things here?
I'm pretty bearish to start his term. I mean, for a whole bunch of reasons that really that don't have anything to do with Trump, mostly for sentiment reasons. But Reagan in his first term, it's funny because Trump rang the bell on the floor of the New York Stock Exchange,
Yeah.
and Reagan did too in 1982. And Reagan said, "Let the bulls run." Right. The first couple of years of Reagan's term, um, stocks didn't really go up. I mean, we were in the middle of a recession. Volcker had raised rates a bunch, and we had this big recession in 1982. And um, there's really like no correlation between how stock market friendly a president is and how the stock market does. Like, there's just no correlation at all. So I think it's very possible that in the first 2 or 3 years of Trump's term, just like Reagan, stocks could go sideways to down. I think that's possible. So
Yeah, fair enough.
Trump is also starting with the market at much higher valuations than when Reagan started. Reagan started with the market at very low valuations. So
Yeah. Are there any opportunities you think outside of the US? Because you see things like there's countries like India and Argentina now that are really rocking, that they're doing very well, or are they going to be pulled down with the US when we get like maybe a recession?
I don't really know the answer to that. I am currently invested in India. I have invested in Argentina in the past. There's those are two places where there's a lot of growth. I assume you're talking to me from the Netherlands, right? So you're talking to me from Europe,
Yeah, Portugal now, yeah.
Portugal. Okay. So, my wife was she was actually just in Portugal. She was on vacation a couple of months ago. Um, I valuations are so low in continental Europe and they're so high in the US that I think you have to invest in Europe. I really do. The outperformance of the US versus the rest of the world has just gotten so ridiculous. And in the US, we have people, generally people say you should have some allocation to international stocks, whether it's 10% or 20% or something like that. And in the US, the underperformance has been so bad that people are just getting rid of their international allocations. The dollar is incredibly strong. I think it's very likely that the dollar weakens under Trump. Trump has to weaken the dollar. If he does tariffs, it's going to strengthen the dollar. So he actually is going to have to jawbone it lower. So he'll act to weaken the dollar. JD Vance is going to do the same thing. And I think that tariffs are actually a long-term positive for U.S. trading partners. So I'm very bullish. I'm probably the only European bull in the world. Like, seriously, like, it just can't get any worse. So, yeah.
Yeah, it seems like it's missing a little bit of maybe a sort of a catalyst, though. Like speaking as devil's advocate, why when we've been seeing the U.S. outperform, why can't it last for another year or so? Because it seems like a little bit of a value trap. I don't know. Europe, I see
Yeah,
what
I
you're
agree.
saying, but
I agree. And it does need a catalyst. Like in, Argentina, you definitely had a catalyst. In
yeah,
India, you had a catalyst. Like Modi was reelected. And he was able to put into place a government. So in India, you had a catalyst. I mean, maybe there's elections coming up in Germany. Maybe Germany moves to the right, so that's a possibility. But who knows?
yeah. Going back to the dollar here, I think is very interesting. You mentioned that it's probably going to go down here. They're going to jawbone it down here. If that stays absent, like some sort of Mar-a-Lago truce or whatever, accord or whatever you want to call it, I guess the natural path of the dollar is going to be higher. But how likely do you think this currency intervention, let's call it, is?
Um, I would say it's about 50-50. I put pretty high odds on it. I mean, look, the dollar is on a purchasing power parity basis, it's incredibly strong. If you go to Europe, you can have dinner for 20 or 30 bucks. Like, everything is cheap. Everything is incredibly expensive here in the United States. You can't really trade off a purchasing power parity, but when you get to extremes like this, like there, it's usually, kind of like the yen in 2012 when the yen was at 76 to the dollar. It was incredibly strong. Japan was very expensive. So, PPP kind of works around these extreme levels. And, Trump in his first term, um, was talking down the dollar pretty aggressively, and so the U.S. can export more, and I think the same thing is going to happen this time. I think it's only a matter of time. So,
Right. Um, let's try to reconcile here with your short dollar view. Let's say the dollar they bone it down. Doesn't that uh, prolong the cycle? Doesn't the bull market runs on, no, in a lower dollar scenario where it crash or it goes down a lot.
I don't know that there's a relationship between the dollar and the stock market. I think one of the reasons the dollar is so strong is because it's attracted, the US stock market is attracting flows from foreign countries, right? So you have to buy the US dollar to buy stocks. So I think that's one reason for dollar strength. I actually think that if the stock market sells off 20%, you're probably going to see outflows out of US markets and into other markets, and it probably weakens the dollar. That's just my guess, just on capital flows,
Yeah.
but nothing to do with trade flows.
Are when it comes to the U.S. stock market slowing down here, are there any particular areas that you're focusing on that really are going to ring the bell for you, like the Mag 7 or something else?
What's funny is that this morning there was a press release that the Chicago Mercantile Exchange is going to list single stock futures on the Mag 7, right? So stuff like this, like whenever you see stuff like this does not happen on the lows. Like this happens on the highs, you know. There was actually there's a ETF issuer that's last week is said they were launching ETFs, put right ETFs on most of the Mag 7, selling puts on Mag 7 stocks. Like this is where we are in the cycle. So I honestly think a sell off in US stocks is imminent. So
Let's maybe move to another country here that is widely debated if it's bullets or bears. China. Any thoughts on China here, or is there increasing stimulus going to be enough to get things going, or is this a false start?
I mean, I think China is going to continue to stimulate more. Um, Whether it will be enough, I'm not really sure. China is, Trump is going to put tariffs on China. China is going to devalue the yuan in response. And that's another reason why I believe that the US will intervene against the dollar. Um, maybe sell dollars by yuan. That's a possibility. Um, I'm not, I've never been involved in the Chinese stock market. If you look at the Shanghai Composite, it peaked at 5,000 in 2008 around the Beijing Olympics, and it went back down to 2,000, and it's been there for the last 16 years. Like Chinese stocks have never been an attractive proposition to me, not in a country where property rights don't really exist. And you see a lot of people, trying to pick a bottom in Chinese stocks. I mean, that's fine for a trade,
Yeah.
but if you're holding EEM or VWO and it's 30% China, I think that's very unattractive. So,
Yeah. Um, Maybe something else that China related, surely. Commodities here, also related to dollar, of course, inversely. So, any thoughts on commodities? Are you still trying to squeeze your way in there and try to call it maybe a secular or a bottom here in this market for the
yeah,
rep?
I think so. Like we had a tradable bottom in September. Commodities had a really good month in September. They were up about 8 or 9% and have traded back down. I think they're kind of forming a base. Um, it look, every day I walk into work, dollar is up, stocks are up, commodities are down, bonds are down. It's the same thing day after day after day. And you mentioned the catalyst, like um there was a research piece about commodities I read about 4 months ago, that basically said that you should not wait for a catalyst. Like valuations for commodities are so low that you should just be invested, and there's really no penalty for being too early, right? And I tend to agree with that. I don't think you really lose anything by being too early. So, not to say that commodities can't go down another 10 or 20%, but I kind of think that's unlikely. So yeah, I'm super bullish for the long term.
I guess if you're bullish to commodities, but you think that the stock market isn't going to have a great time, you're probably staying clear of the commodity producers here, or how would you play that?
Um, I have a little bit of exposure to XLE, which is the energy ETF. And I have a little bit of exposure to FCX,
Big
the
one.
copper miner, but outside of that, I really don't have a lot of exposure to the commodity producers. But I look like what I've just described to you with all these different asset classes, with the dollar, with stocks, with commodities. I mean, this is the doomsday trade, right? Like, this is really what this is. Like, commodities up, stocks down, like dollar down. Like, this is, I mean, we right now are at. I have I don't want to say I've ever seen sentiment higher, because I think in the dot-com bubble, I think sentiment was actually a bit higher, but sentiment is extraordinarily high right now. Like, you've seen charts of, if you spend any time on Twitter, people are passing around these charts of people that think that um, stocks are going to go up in the next 12 months is at all-time highs,
Yeah.
all-time highs. So you've had economist covers where they have a picture of a rocket with the US on it and it's launching into space. I mean, come on, like this is, there's so many sentiment indicators out there. So
Do you think that maybe once, if these Mag 7 type of stocks here start rolling over, or just being neutral, just not having the growth profile anymore, do you think that maybe that giant pool of capital starts to rotate and things that we see as undervalued here, like commodities here, and that's maybe the catalyst that things that we're waiting for here?
yeah, and maybe value stocks as well. Maybe you'll see a rotation into value. Um, Like, I mean, like basically, I mean, Nvidia is trading at 34 times sales, like not even earnings, 34 times sales. It's insane. Um, so I think what you'll see is a rotation. I mean, I've seen a couple of cycles of this in my career where people, it's not even as simple as growth into value. It's really about, people at some points in history, they need proof, they need earnings, and at some points they don't need proof. And right now they don't need proof. And we're gonna transition to a point where they need proof. They need to see those earnings. US energy producers are trading at like 4 times EBITDA, right? So you can buy, E&P companies, and you have a payback period of 4 years. Like, it's paid for in 4 years, right? That's absurdly cheap. So yeah, I think there's going to be a rotation out of stuff that's expensive into stuff that's cheap, and that includes Europe as well. So
Yeah. I'm going to mention also something that you were somewhat involved in, I suppose, some time ago. You were wrong. You were right, and I was wrong on this on the intermediate term. um, let's talk a bit about uranium. Do you have a 20,000 feet view here? Are you even looking at it? Any thoughts here?
I mean, I only look at uranium from a sentiment standpoint. I don't know any of the fundamentals at all. And what I'm starting to see is some of the uranium bulls give up, you know. And that actually is kind of bullish to me. You know what I mean? Like, I'm starting to see capitulation in uranium, which gets me kind of interested. I mean, don't get me wrong. I think we're kind of in the late innings of this trade. I think we have one more push higher in uranium, but um, when I was, I was involved in uranium. I want to say like 3 or 4 years ago, maybe 5 years ago, I was a shareholder of Cameco, and I also bought the ETF. I bought URA, and that was a great trade, you know. But that was very early on, way before people were talking about transitioning to nuclear. It was
Yeah.
before AI. It was before data centers. It was before all this stuff, you know.
Yeah. Yeah, I got in as well like 5 years or so ago. It was a great investment. I think we're probably halfway there pretty much, but it's certainly taking its time. Let's see. Do you have any thoughts maybe on inflation here? Because I keep seeing this chart relating to the 70s. I think it's, well, a bunch of bullshit to put it. I don't think it's gonna rocket to a new high. We're not gonna see 12% inflation, I don't think. More of a proponent of the thought that this inflation was like a supply demand mismatch in the real economy with Corona. Do you have any thoughts on inflation? Is it bottoming here? Is it gonna just stall out? What do you think?
Well, I think there's more upside risk than downside risk to inflation. And the reason I say that is because, like, psychologically, people still believe we have inflation, right? In the US, like if you go to the grocery store, um, in 2024, you spend $300 at the grocery store. In 2019, you spend $150. So every time they go to the grocery store, they get this mental reinforcement that things are much more expensive than they used to be, ergo, we have inflation. People cannot distinguish between the level of prices and the rate of inflation, right? Like inflation has slowed down significantly. It's gone from 9.1 to 2.7, slowed down quite a bit. But people don't look at the rate of inflation, they look at the level of prices. And the level of prices generally doesn't come down unless you have a severe recession. So, prices are much higher than they were in 2019. People believe we have inflation. And if you believe we have inflation, then you act in such a way to perpetuate inflation, right? So you go to Costco and you buy like 200 rolls of paper towels, right? And you do that because in the old days, you would buy 12 rolls of paper towels, but now you're concerned that the price is going to go higher. So you buy more, which accelerates economic activity and causes inflation, right? So it tends to be self reinforcing. So like I said, I think there's more upside risk to inflation than downside risk. And that analog chart with the 70s, I kind of don't think that's bullshit. Like I actually think there's some merit to that. Um, I am not entirely sure that the Fed played any role whatsoever in bringing inflation down. It just might have been a psychological wave, right? So, yeah, I seriously, unless we get a really severe recession, which could happen, I don't see inflation going below 2%. I think it's got more upside than downside.
Yeah. Let's go back maybe to you think 2025 is going to be a mediocre year, let's call it. Do you think there'll be wide dispersions between asset classes? Are there going to be relative winners and some giant losers, or are they all just going to go down 10-20% or something and bleed to death a little bit?
I actually don't have an answer for that. I don't know.
All
I
right.
can't predict that. No, I
Yeah.
don't know.
So you have no idea, like, are we gonna, if 2025 is gonna, are you expecting like a mild or like a big calamity or no idea?
No.
Oh, okay, fair enough, fair enough. Um, let's see. What is there anything that you think is worthy of mentioning here that we're seeing here that you think traders or investors should be looking out for?
Um, no, I don't think so. I mean, I gave you my view on stocks. We haven't talked about interest rates much. Um, rates have come up a lot in the last couple of months. And the bond market just acts terrible. It acts terrible, and it actually has me a little bit concerned. Um, but I don't really have a complete thesis on that. So I don't know.
Yeah, fair enough. Um, maybe want to promote your book?
Sure, I got a couple books here. So I got No Worries.
Yep.
Here's No Worries, which you
Great book.
have. And this is my short story collection, Night Moves. So this actually just came out 3 months ago. So
Yeah. Great read. You really would know how to put it together, and certainly encourage all the listeners, viewers to look at your work. It's very worthwhile.
thank you.
Okay. All right. Thank you for coming on the show, and hope to do it again sometime soon.
Okay, cool. See
Thank
ya.
you.